GM. GM. Tuesday, 6th of Feb. Let's do daily levels. So, first of all, Solana is down. The jokes write themselves. To be honest, Solana used to have a lot of problems with the chain going down back in 2020, 2021. And I mean, the fact it's down again is probably not really a massive problem unless it becomes a persistent issue. Hasn't been down for almost a year, which for Solana itself is good, right? As in uh, the development, they've been a lot worse in the past, and this is like an improvement. So obviously, you don't want your chain going down, and eventually, it needs to get to a point where there's no downtime. But overall, I wouldn't say this is a massive cause for concern. It's going to give the ETH maxis a chance to shit on Solana. Yeah, well deserved if it happens, for sure. Um, as for price, it doesn't. To me, it doesn't do anything. If you see an overreaction, which we haven't seen, if you saw an overreaction and went dropped down to 85 or down to 80, that'd be a buying opportunity to me. But as price is holding up pretty steady, I don't see this as being much. There'll be a bit of FUD circulating. People will be shitting on them. The Solana maxis will try and say it wasn't an outage. It was what did they say in the article? Performance degradation. That's the chain's gone down. So let them meme. Let them meme. So back to more important matters. Bitcoin looking good here. What I'm looking at next is this. So consolidating nicely up at the 50 EMA after having reclaimed it and having reclaimed the daily bands. Now, you know from times I've talked about trending markets and how trends develop. Once you lose the daily uptrend and then it goes red and then it goes green, this doesn't mean it's back in an uptrend yet. It's potentially an early sign that we're reclaiming the trend. But quite often it just leads to choppy price action up and down. So that doesn't mean necessarily that it's going to the moon. And however, if you want to be a bear and you want to get short, you certainly don't want to be doing it while it's above moving averages, key levels. Right? You want to be shorting something that is trending down and retesting the bands. Like, for example, when you're getting long, when you flip the 50, you fake out below it, you reclaim it, that's when you get long, right? And the whole long happens. You come back and you retest it, you get long. Whenever we lost the 50, some people would have shorted and they were right for a few days and then they were wrong. If it's going to come back to that level where shorts are on the table or downside moves, further downside moves are coming, it's not going to come from here. Yeah, it's going to have to be below that at the bare minimum. So anything happening above there to me is just early stage recovery, and I think that still the most likely direction is up. We got through Monday. Monday finished green after all the fucking bearishness and how bad it felt. Just because if you're too zoomed in on Twitter, you'll see that there was a nice rally on Monday, but then it just retraced the whole thing in a typical kind of mean reverting move, and people lost their minds. Now we've got price just consolidating, and I don't know. It depends a bit on if ETF flows are really bearish this week and there's a lot of selling for whatever reason or an absence of buying. You could see us go a bit lower, but I don't think that's going to be a catalyst to take us to 40k even. The big thing for me was Powell came out in his press conference last week and the market expectations changed quite rapidly to not expect any rate cuts in March. And the market took this to be bearish. At least that was the supposed intention. And you can see the US bond yields spiked off it and the dollar spiked as well. So what you would expect when yields do this, I'll go to the 1 hour chart and we'll put them all together from Friday, which is where over here. Sorry, Wednesday. You'll see. All right. Here's the dollar, Bitcoin, and bond yields. So on Wednesday, leading into the FOMC, we saw yields bottom out, and then they've one way up only since then. We saw the dollar bottom out, one way up only since then. Both of those should be negative for Bitcoin. Right, dollar up, bond yields up, should be negative for Bitcoin and negative for gold. Gold is sort of kind of chopping sideways, slightly weak as well. But Bitcoin has really held up much better than you would expect. Again, it's not doesn't mean like it's out of the woods yet necessarily, but bears do not have time on their side, not in a bull market. And so how can the dollar go on this sustained rally for 3 or 4 days? How can yields go on this sustained rally for going into now the fourth day? And Bitcoin stay steady in its range at this level where it's holding up in an area that should be really strong resistance, right? That point of control from all of the move up, that should be a big resistance. But price consolidating in an area doesn't tell me that it's resistance. Resistance you're supposed to reject off, not trade within. So to me, Bitcoin is filling that gap in. And while it can go lower, and I do still expect at some point we sweep down to 40, the way I view it is if the market wasn't able to sell off even below this 50 EMA for Bitcoin, if the market wasn't able to break that with all the bad news last week, right, the delay of rate hikes, etc., rate cuts, sorry, supposed bad news, like I said, I said I don't believe it on Wednesday. I don't believe that Powell actually said that they weren't going to cut. He said it's not their base case, but the end result is the same. Cuts are coming. And so, it's funny. I've been watching sentiment online. I've been watching positioning. Bears were doing victory laps as if this was really bad, but price hasn't moved. And to me, I think we go up. All else being equal, I think price goes up. This weekend is Super Bowl and Chinese New Year. Why does Super Bowl matter? Well, you could expect Bitcoin ads at the Super Bowl, at least one. Maybe they will, maybe they won't. I'd be very surprised if one of them doesn't do it. Chinese New Year, that's probably the bigger actual direct effect, especially because Chinese government and central bank are easing, so they're printing money, they're supporting the markets, and they're talking very dovishly as well. This is actually very common that there tends to be a lot of easing. So the way China works is obviously our calendar New Year is January 1st. Theirs goes by the Lunar New Year, which is in this year. It's in February. This weekend, this Saturday. And historical trends are not predictive of the future, but China tends to start the year very, very hawkish and quite bearish in January. And then the closer you get to Chinese New Year, they start to be a lot more dovish and a lot more supportive of the markets and stimulative. And they're following the exact same path this year. Chinese stocks actually went up finally for the first time in fucking what seems like forever. So a big reversal. Well, not you can't call this a reversal yet. It actually looks like ETH BTC, which is kind of funny. It looks exactly like ETH BTC. ETH BTC is a CCP asset confirmed, but it's an attempt at a reversal. People are very dismissive of China now because a bit like ETH BTC, every time it bounces, it retraces and bounces and retraces and bounces and retraces. But obviously, eventually, one of those bounces will be the bottom. And so, while that doesn't necessarily have to directly mean much for crypto, if China's not falling apart completely and they manage to rescue their economy by stimulating, it's obviously going to be good for the global economy because China's the second largest economy. They trade with every country. A proper collapse in China, it's hard to see how that wouldn't have some negative effects across the rest of the world because of contagion. Because, the money in China, right, the investors, all the debt, it doesn't just, it's not just contained to China. They have assets and liabilities all across the world. So, all in all,